revenue stream on in both of those, and I think that was part of it. And then there was, and I think it had the revenues were projected at 3.4 million, something like that. Where the other in the general fund, actually, it is 3.775 million. And so that's the one that we'll be working off of. There is, and I can send you the sheet that shows all of those that are on there on the other one. But you should have only had a general fund and a non-general fund, starting with the other caps. And this one broke down. This breaks down of all the revenues together, everything there in the 3.775, 950. This does break down to about close to 11, a little over 11.5% of where we initially projected to be. And then if you're looking at the appropriations, you have completely appropriations by function in different areas, and then it breaks down into the individual departments from there. And James will back through all of those too. So I guess the easiest way probably is to start off, Kathy, and help me, this is more your document and your area of understanding of what truly needs to be explained from the document so everybody's on the same page.
So the way I went through this is we started the process in January before all this happened, and we looked at where we thought the economy was going to go, and we figured we were going to have a little bit of a drop. So we started planning for that, and then when all this happened, we then, created a contingency plan. So then as we got into this and we saw that we're not getting any support from the federal government, even now we have gotten nothing definitive that we're going to get. So we didn't put anything in the budget. We figured, well, we just have to get done with what we have. And so that's what we did. We just started going through and figuring out what we can do with what we have, trying to be creative, trying to think of anything we could to lower costs, spread things out, consolidate, all those kind of things. So we asked the departments to reduce between 8 and 12%, and everybody was wonderful and they worked really hard. And so we're at, you say a little over 11%, right, Matt? So that's where we are. And so I just took it department by department and worked with every single department head and line by line, and just trying to figure out where we could cut a little bit here or a little bit there, or share employees, or postpone projects, or whatever we had to do. I got to give David a lot of credit because he did a lot of work in trying to spread things out and prioritize some items, because there's a lot of stuff that we don't want to wait. If we're going to lose money by not doing it, we prioritize those things. And if there was a safety issue or a health issue or something like that, we prioritize those. Like David, the Franciscan project, that's something that can't wait. But other things that we really need to get done but could be postponed, or do some of it this year and spread it over 2 years. We did a lot of that kind of thing to try to spread a project out and have part of the cost this year and part next year. The other thing that all of us have been doing a great job at is shaking the tree on any kind of grants that are out there. Lori came up with 2 or 3. Eric did 2. Brett did also. So we're really working really hard to any money that is there grant wise. Everybody's on the lookout for that. So most of those grants are not reflected in here because we don't have anything definitive. But anything we get in grant wise that we know we're going to get is going to help our situation. And then we can reevaluate the things that we've cut out and say, okay, well, we've got this grant money, let's bring this back into the budget. So we're very hopeful that some of those things will happen. So I guess I'll just go through. Do you want me to like just go through like line by line, or does anybody have any questions before we get started?
I just wanted to, like when you were saying, talking about maybe like sharing people, there's nobody that, no position is being eliminated, correct?
No,
Okay.
nobody's being eliminated.
Okay. Just want to make sure when you said about job sharing, I was like,
Well,
sure.
there's two different aspects to that. The first aspect is if we have somebody in a department that where their duties are less than they were before, or they're not as busy, we're all working together to make sure that that person has plenty of work to do, over a different department, so that we don't have to lay them off because now, we've got plenty of work in other departments. So
Right.
I was just utilize people.
If it's like mine, we just pull from wherever we can and make sure everybody gets everything done and keeps busy. But I just want to make sure that that's so good.
The second part of that is a work share program through unemployment, which is only available till August, where instead of laying somebody off, you keep them on staff and they will pay whatever hours you reduce your full-time person, they will pay those hours.
And are we doing that to people?
We will do it in some limited cases. We're being very careful with that because we don't want to mess up with a lot of people's retirement and health benefits and that sort of thing. So we're being very careful about that, but that is an option that we might have to utilize. But the goal is that there will be no, full layoffs where they're no longer at the city.
And I think, guys, too, I'll point out when you're looking at salaries, I think it's important to let you know that because initially I had talked about, and even the memo that I had given you, that we were going to utilize at our last meeting that we had, as we were looking at cutting or freezing wages completely with merit and no COLA for 6 months of this year. What we ended up looking at was, as the departments did a really pretty good job of, as we went through and trimmed a lot off here, was a decision that said we'll still give people their merit increases, but we will freeze. There will be no COLA for the whole year at this point in time, unless we see a complete difference in revenue somewhere. And so those costs came out pretty close. And plus, it's going to be easier for us to manage. It's not going back after 6 months and say, well, who should have gotten a merit and where would they be? Yeah. So we ended up stretching that out over the full year. And then there's no having us to go back and recalculate and figure anything else out. So,
if I could, oops, sorry, go ahead.
No, I was just going to ask. So did we get, I can't remember what you said. I'm sorry. Did we get the seasonal help?
Not currently, no. The seasonals are not in here.
All my shrubs out front are still jacket.
Well, and the other part we had this week was the reality. It was hard to get to everything with the flood and the barricading that went on. From there.
I had a little orange sticker from the city of Elma on my trees.
Yeah.
Which is fine.
So
it's fine.
We're going to, and the other part that we're doing when you bring that up, Michelle, is what we're looking at is if revenue comes on board that we haven't expected in here, which there's an awful lot that we don't know here. As revenue comes on board, what we're trying to do is prioritize what would be those first things we'd start plugging right back in. And I think that would be the biggest key that we could do is how can we plug something back in as we see revenue. We don't want revenue just hanging there as we continue to have this expense that's been coming. So the idea would be we're going to jump in on those and make sure.
Hey, and if I could, I jump in. You talked about revenue. I got a couple of questions on your revenue projections. The first one was your personal property tax projection, moving up to 440. Is there a basis? What do we expect to increase there?
Well, we've done all the new assessments in December, so we're hoping that happens. And all of the property tax is already set in stone. So we're hoping that none of that will change that number very much with the Corona situation. And personal property tax, it's all businesses above $80,000 in assets. So I'm hoping that we don't have any larger businesses struggling through property tax time. But because we've got some very strong industries. So that might have to be a flexible number, but I am anticipating that it will be one of the stronger revenues through the tax season. But we'll have to play it by ear, Greg. If I'm wrong and we start to have bigger businesses that are struggling, then we might have to revise that. But I don't see that really being the worst one to worry about, let's say.
You think it's coming from like the boat company, or
Yeah, yes,
that's
for sure.
the primary driver of that?
Yeah.
Okay.
Mm-hmm.
And then the other question I had on revenue was the line CVTS distribution
Yes.
moving up to $40,000. I don't. What is that line even? I guess I don't even know what it is.
That is the revenue sharing, and the revenue sharing it's based on per capita. So for everybody, do whatever you can to get people to fill out the census, because the revenue sharing, whatever our number is in this census, we're stuck with that for the next 10 years, and we're paid per capita. So tell everybody to fill out their census because we need every person to be counted. So it's per capita. It's 15% of the 4% sales tax, and there's a big allocation formula, and all cities, states, and villages and counties get a percentage of that money. Now it's based on sales tax. So we just got a new projection on the 15th, and they're saying that it's going to be down like 40,000. That's what they're saying. Our part is going to be down about 40,000. So I'm hoping that would be a wonderful thing if it's just down 40,000. So we'll see.
When is that distributed, Kathy? When do
We get it every 2 months. We get it December, February, April, July. So it's every 2 months, and it has been the number that we were going to get total was just over $1 million. I think it was $1,075,000 or something like that.
Because on that line item, you're only showing 109,000 as of 4/30, and then I assume that's for the fiscal year. In the second column.
That's because the activity. Yeah, because that's only about one payment. So why is that low?
We've only got one payment in this fiscal year?
That's a stabilization. That one's 155.
No,
I'm sorry, 155.
Yeah, I think
Sorry.
it's the two together. It's the 578 and the 155 is what we've received so far. So that's about 700,000. And it's total, I'm putting it at 8.
Okay, so that's combined with this Community Stabilization Act?
Yeah. It's the constitutional sales tax and the CVTS distribution. Those two together is the revenue sharing.
Okay, so that's where you get your $1.1 million, and then going over, we've got 7.25 maybe so far this year.
Yep.
And you're projecting 8, so 940 next year. So okay, that makes more sense.
I just looked at it this morning, that projection as of May 15th was still 1,075,000. But
you're only in the budget. You've only got 940.
I know, because I can't imagine that we're going to get. It's based on sales tax.
Yeah, well, I don't disagree with you. I'm just trying to figure out.
Yeah.
Make sense of the number there.
I would love to say that it's going to be 1,075,000, but how in the world the last 2 months would we be able to have normal sales tax? It's just not possible.
No, I agree. I'm not arguing with you. I just didn't, I didn't know the two numbers were together.
Yeah. I think what happened was we're just putting it under a different revenue number. So that's, next year it'll be on the one particular line, but in here it's just, it was posted two different numbers.
Okay. Thank you.
Yep.
Full disclosure, guys, as we were talking to the last couple of weeks, the revenue number is the one, or the expense number and the appropriations number is the one that we've really tried to control and look at. We knew that the revenue number is going to have to be kind of throwing darts a little bit, so we're trying to make the best guesstimates we can to end up balancing this thing as we look going forward and try to be as conservative as we possibly could.
So let's see, the 101, 191, 676, which is reimbursements, that is for retirees that are still in our healthcare plan, and so that's money that they pay for to continue on our healthcare program.
And where was that, Kathy? I'm sorry, I didn't follow that number.
101, 191, 000, 676. It's about a third of the way down. It's 50,000.
It's on page 2.
Oh,
Oh, I'm looking on the other. I was looking on the full one. Sorry.
What's the number again, Kathy? 191 what?
191. That's 101, 191, 000, 676. So if you're looking at just the general fund report, it's the top number under finance administration, and it's $50,000.
I see it. Thank you.
Everybody see that?
I haven't found it
Audrey, you
yet.
don't see it?
No, I haven't found it. I've gone through the whole thing here, so I don't know.
Under finance administration, you said?
Finance and administration. Are you
Okay.
looking at the report that says at the top right-hand corner, 4 out of, page 4 out of, I don't know how many pages?
I have the budget general open. Is that?
So it's page 4?
Yeah.
So go to page 4. I haven't made it that far yet.
Is it, are you
I
looking?
don't have anything close to that on page 4.
I think what we have, guys, is that thing you talked about earlier, Greg. We've got two different looks of what the one had the general fund printed on it. And we're talking, so the general fund one that I'll show you where it's at on mine. So
But maybe you guys should be looking at the ones that you gave to us to look at.
yeah,
So
that's what I've got.
We are.
I am on a plain general fund. I am on page 2 of 11.
Yes.
two.
So when you look at
11,
the
okay.
report, guys, if you look at the general ledger numbers on the left,
Yeah.
is it 101? Is the second set of numbers a whole bunch of different numbers, like 301,000?
No.
Okay, so you guys are on the one that's just the general fund.
That's where we're told to start.
Yep.
Yep.
That was me sticking my
General
nose
fund.
in.
The general fund is broke down by department. All the other funds, see what Matt has?
I don't know if that's coming in very good.
Looks like a piece of paper with some writing on it.
That's yeah, it's probably not the greatest to help you.
So if you guys are looking at
11.
the report that has just department by department, is everybody on that one?
Is
Roxanne,
it
you good?
the general fund one, not the non-general fund, right?
We have two documents to work from. One says general, one says non-general. So I've got the general open.
Right,
Me too.
and that's by department.
Okay.
But here's what Audra.
So under finance and administration, I don't see anything with a number 6 in it. I see 702 down to 8 something.
You
No,
don't see the top number as being 191,000,676? The top number?
Matt,
Yes.
why don't you forward to Kathy what we, like Audra said, what we have?
Here's
So
the,
under, wait a minute.
I'm going to
So
share
I
my
see
screen.
appropriation starts at 702, but I did just look up under estimated revenues and there is a 676.
Yes.
It's by itself. So that's why I didn't see it. So
Oh,
I did find it. Greg, did you find it?
I did not yet, no.
Go right above appropriations, and it's squeezed in there under estimated revenues.
I don't know why I'm doing that. You can't see it. I'll show you that on here.
It's kind of in a category all by itself there.
Yeah.
right, because this is finance administration, we don't have any other revenue. So we only have one line item.
Here's the easiest way. The top of that page says city manager.
Oh, there it is.
And then it's right down in that next little category.
Yeah.
Jesus. That's the
Sneaky
hardest
one.
damn thing I ever found.
Well, we picked the one that was the hardest to find. So,
Nick,
There we
did you
go.
see it?
I finally found it.
Okay.
Did you get it, Nick?
Yeah, I found it. Holy cow. It's like an Easter egg hunt.
well, but now it looks like we got everybody on the same spot, though. That's the good
Okay.
part. So, okay.
Gosh, these old
Oh, what was the
Bibles
question?
tickle it.
So that 50,000 is health insurance that our retirees pay to stay on our plan.
Okay, now it doesn't show any history there. Have we not collected that before, or where was it showing before?
That was in the past that all of this division was in 604, which was an internal service fund. So this is moving up into general fund. Remember, we talked about this in like November, December about getting rid of all the internal service funds. So most of the cost is up here. We still have some that have to be transferred up this year. So in the activity, it's not there, but in our budget for next year, it is there. So in the activity, it's being allocated up to the general fund.
Okay, and that's reimbursements, so that's, they pay the full boat on that though, right?
Yes.
So we're not subsidizing our retirees.
No, but we have a separate plan for them called Medicare Advantage, and the premiums are lower than what our normal premiums are. And it's
So
very
that-
good insurance.
That is a real insurance plan, or is that part of our self-funded insurance program?
It's part of our regular insurance, but it's because it's Medicare Advantage, it's in its own individual group, let's say. It's a separate group, but it's under our insurance. It's exactly the same as ours.
Okay. And that's less costly. It costs less to insure a retired individual because they have Medicare. Is that
Well,
correct?
because it's a Medicare Advantage program, so the premium is less because it's a special program.
Right, because the benefits are less than what you normally receive in a regular insurance program.
The benefits are
Medicare-
less, but an Advantage plan gets your Medicare costs, right? So they're
Correct.
paying part of the premium through our Medicare.
Yeah,
So that's why it's less.
Yes,
all right.
But the long and short of it, this is simply a pass-through.
correct. Yes.
And their experience then that wouldn't hurt our general insurance policy.
No, it's basically a wash.
Okay. Thank you.
So if you go down to the 702 in the finance, which that's my department for wages. We originally were at 290 and now we're figuring 195. We've done a couple things there. We've allocated some of the people in finance to different places. And let me tell you who that is. So, 20% of my salary goes to transit. Part of my salary goes to treasury, and part of my salary goes to finance. So my salary split 3 ways. Brooke's salary is split between treasury and finance. Amy is between elections, city clerk, and finance. And that's it. So the reason it's a lot less, because if it was all in this department, it would be about 290. But because we're trying to split the salaries up to where people put their time, it's at 195. So I wanted you to make sure that you, if you saw that, that you would understand why it was different. Any questions? And you'll see that a couple different places.
You didn't have the allocation on the back of here, but I'll get you that allocation sheet, guys. It'll show you then where we're all split out. Eric's so split, he has his own category, so we don't have anything just specific. We have to just call it Eric Ripley, and then wherever his stuff all goes. So
The Eric Ripley department you
Eric
have?
Ripley department, yeah.
The Department of Eric.
I call
Really,
it
what we
Eric.
think is this will give us a better way as you're talking about budgeting, especially into the future, that truthfully we're looking at where is time spent, where are those things that we can actually attribute the
Can
money.
you see it?
It's hard. It gets pretty
Yeah.
blurry.
No.
It's a big portion in the front of the book.
Yeah. Yeah, Eric's department is called Eric Miscellaneous because he's in so many places.
I never did think he fit any place.
Well, he's just too valuable. We have to all share him. That's what it is.
There you go.
So, looking at finance, you'll see there's a bunch of line items in here that are different than any other department, and that's because we're starting to split out all the fringe benefits. I'm sure you're used to always seeing fringe benefits with this big, huge number, and nobody has any idea what that means because it's federal and state taxes, it's retirement, it's all the health insurance, all pooled in one number. Nobody has any clue what that means. So we are starting to break it out. So you have unemployment, Social Security, Medicare, insurance opt-out. So if someone chooses not to take our insurance, we pay them like $100 a month not to have our insurance. There is dental, life, medical insurance, all those things. In my department, it's all broke out. As we get through this, it'll be broke out in all the other departments. But in my department, we're just getting it all taken care of so we can kind of test it. So it'll be easier to go through this and understand exactly what medical costs are, what dental costs are, and life insurance and vision and all that. But to track it and make sure that we're staying within budget, number one, that we're budgeting properly, and also that we're making sure that everything is being paid and taken care of. So it's a little more work, but it's worth it because you can then look at the numbers and they're relevant instead of just a big pooled number that nobody understands.
And if I understand how this works too, this also gives you the ability to have drill down reports.
Correct.
Where you could pull a report at the higher level and also pull the same report with drilling down into the various categories, right?
Absolutely.
So that'll be a nice thing going forward for, especially the department heads, I would think.
Yes. And the reason why another reason why this is so important is we're doing a lot of work in payroll to make sure that that all the processes in payroll are working properly. So at the end of the month, when we print reports, we can look at those reports and we know if something's missing, if something's right, what has to be paid, what was overpaid, if something was overpaid. But we can, just by looking at the GL, we can tell what's going on and what's missing or what has to be corrected or adjusted. Whereas if you just have one number, you don't know. Was it retirement? Was it taxes? Was it health insurance? There's no way to tell. So this is going to give us a really good tool to make sure every month that we are reporting on everything just as properly as it should be. So that'll be rolled out as we go through the year. Got a little delayed now with the nonsense that's going on, but you'll see it a lot more like that's in the finance department. You'll see those line items as the year goes on in all the other departments.
And Kathy, doing it this way also follows the state recommended guidelines for the general, the accounting ledger and how they would recommend you do things, correct?
Yes.
Because we have not been following that properly in the past.
No.
We just basically did a straight percentage in the past, Greg, was what
Yeah.
So thank you for bringing us on board with what I think was probably the better way the best practice way to do it.
Yeah, the state actually requires you to do that. And it's called the Uniform Chart of Accounts. And it's never been followed. So we're as we can, we're making the adjustments and getting everything in line with the state so we can track things better, and the state will be happier about it too.
It allows our payroll system to work like she was talking about better too. I mean, it ties all this. The reality is with the system that we now use that we could tie all of this stuff in together and been able to do that. We've had to make a number of payroll corrections as we've went through of things that were passed in the system that we've been working through over the last, I don't know what, 4 pay periods. So as we've been making these things and getting this into payroll properly, it will put us in a much better place going forward.
Those will populate automatically when you're on a payroll from now on, won't they? I mean, once you get them set up, they'll just automatically shoot into those categories.
Well, and that's the thing. The payroll reports we were printing before, they never matched anything. And I thought I was crazy. I couldn't get anything to work. Well, there's so many little things that were not set up properly, or, there was adjustments here or there. Nobody knew how it was working at all. So we're now at a point where we can start printing reports and they're relevant and they match and we understand how they work, and we can check back and make sure we're doing all the right things. And it's going to be a big time saver in the future too. Instead of having to spend hours figuring out where a number comes from, we can just look at it now and know whether it's right or wrong. So it's efforts well made.
Yeah, in the long run, this is really going to pay off. Thank you, Kathy.
You're welcome.
That's exactly what we were looking for.
Is there anything, Kathy, is there anything that's just sticking out too, guys? I mean, what we're trying to do too here is is this a little more meaningful? Can you see it? Does it show? I'm not trying, because I know finance people, sorry, those of you who are, you'd probably love to go line by line and continue, but we'll be here until tomorrow afternoon, which is great. I'll be here until then. But if there's anything that sticks out completely that we should probably address right now, because I'm going to guarantee you everybody's mind will start to be like mine.
Yeah.
Mine's already there. I don't have. Yeah, I'm good.
But Roxanne, anytime you want help, or you do a Zoom meeting and I can show you my screen and go through the
I
process.
understand what you have here. And the thing is, I trust that you guys know more than I do about how I'm supposed to look and make sure, or the overview. I will never know that's why you're the finance person and I'm not. So I'm not sure exactly what. I don't think we need to go through every line of line.
I think we got enough good people too. A number of you guys have good financial minds too. So if you're looking at something, I know that you will see something that needs to be adjusted, and I think that's I trust you guys too. That from that.
My opinion is once we get this up and running and get it, this next year is going to be good, and then years following that will be even better because it's going to be consistent from period to period. The trouble in the past is dollars have flowed from one category, one account to another, and you
Yes,
can't compare year to year any particular line item. It's just been frustrating as all get out to try and look at a report and figure out where the money's coming from or where it went. Now,
yeah,
once the system's up and running, Roxanne, you're going to be able to look at this and say,
Right.
okay, here's a line item. It was $4 last year. It's going up to $10. What's going on?
yes,
You know, that's what we need.
yep.
Right. Right.
And the
Honestly,
other
Greg, that's a
part,
good point.
You gotta
Because
have
as I looked at
consistency
this
from
even to start,
period
that's
to
what I was,
period.
yeah,
you
Yeah.
know, I saw that as I looked and it's like, well, 18, 19, there's this amount. How did we get here? And it's because of the changes that have been made. And I believe you're going to look at a much more accurate picture.
yeah.
Yes.
Poor David, about 2 or 3 months ago, he came in my office, total panic, because he was trying, David, I don't remember what it was that you were looking for, but it was a big line item and it had gotten moved someplace else and he couldn't find it. And he was like, oh my gosh, what am I going to do? We did find it, but that's a perfect example of what you're talking about. That was a big, I think it was almost $500,000, wasn't it? Yeah,
Yeah,
it was
the Opera House parking lot. There's about 480,000.
And he
It must not have been cash because David's still here.
Yeah.
Well, that was a showstopper for about an hour and a half. But
yeah,
yes, Kathy was able to find it. Thank goodness, because it wasn't where I put it. I know that. I could tell you that much.
yeah. So that's the good thing. We're if we make changes, we tell the department head, hey, it was here and now it's moved here. And we're sticking with the chart of the accounts from the state, so everything should be more consistent and easier to see. The other thing that you guys will also have is, Matt, are you doing this? Are we just going to do the footnotes that are in the budget report, or are we going to do the other spreadsheet with the footnotes that I was doing?
I'm sorry. And I had such a great answer. I think we'll use the ones that you were talking about with those footnotes in there because that's very specific as to any anomalies that you may see. And I think that would be the way to do those. So you'll have a good idea.
So all the staff has been doing a really fantastic job about adding notes to all the line items, and I've been doing the same as well. So when you get to all the footnotes, you'll see, like, for salaries, you'll see, you know, the department, the name, and the percentage of their salary that is in that department. If it's contracted services and it's over about 5,000, we're going to list the vendor. If there's training, we've been trying to put as much as of that in there because, you know, when we go to do the budget, it's something like, oh, there's $10,000 in training. Well, what kind of training? I don't remember what we went to. If we put it in the footnotes, then it's easy. Well, I went to this training and it was, you know, 800, and then it's a piece of cake because you know which ones you have to do every year for certifications or whatever. So it makes it a lot easier going forward.
Kathy, two things that I have. And going through all of these, I see on just about every department, I see ISF, some kind of services. Tell me what ISF means, please.
That's internal service fees, and we've eliminated those. So basically, there were several departments that were charging other departments labor to do work for them. And I understand that, but as far as I'm concerned, we're all city employees. And I don't think that, you know, if I'm working for Brett, why should I be charging him and upcharging even for my services because I'm his coworker. I'm not his vendor. So that was happening quite a bit. And because you have that shell game where, you know, we're charging there and the cost is here, you know, you never get a straight answer about what the labor is or what the charges are. And it was very frustrating for staff, not to mention the fact that those service fees were not being allocated on a regular basis. So you would say, oh, you know, I'm a couple $1,000s under the budget going into May, and then all of a sudden there's this big rash of entries done, and all of a sudden you're over budget by $5,000, and you don't know how that happened.
Okay, thank you. That was my second question, was that I noticed all of them have disappeared.
Yep.
They've been on there, and there's nothing in the final column, which is a good thing. I like that, because I think that's a way that fees and that stuff can get hidden in a budget that shouldn't be hidden in a budget. And I like that out there.
Yeah.
The other thing that I think at this point in time, rather than asking us if we have a lot of questions on that, what do you see on this that you think needs comments?
That's a good question. We have really cut things down really to the bare minimum. We really are, you know, between eliminating seasonal people, we've talked about reducing hours at City Hall, or closing one day early, or doing a bunch of things. One of those options are, if we have to take some money from the fund balance to support operations, what level is it that would be comfortable? Because right now we have nothing coming out of fund balance. But as this goes along, as I said, we're going to be doing reports on a regular basis, so you know where the numbers are. We're doing a cash flow statement, so you'll be able to see what money comes in and what money goes out every month. But I don't know if I'm wrong, Matt, but our conversation was we would like to get a better understanding from you folks what you feel some of your priorities are. And you clearly stated that.
I think we hit that. I think we hit that pretty good in the last meeting, and I think where we're kind of at now is saying, and Kathy's not telling you this because Kathy has that number in her mind already. If things continue to this and what we're looking at from the budget, she already has the number in mind that says this is what we may have to pull from fund balance based on the projections and where we're at right now.
All right, to go back to Greg's point, we have some remarkable tools at this point, ways to organize the information.
Yep.
It might be worth our while, either monthly or bi-monthly, to have some sort of actually a dashboard. So you would look at certain things like, and you would say, here's what personnel was for the last 3 years, plus we're green, we're right where we ought to be, we're yellow because we seem to be high,
yes.
Red, or in some of these other categories, because now you can cut across budgets as well as do them in the different silos, if you will, and I don't mean that in terms of not talking to each other, of departmental things. So I don't know what my colleagues would want, but to me, I'm thinking, is there a dashboard we could get maybe once a month, once every 2 months, that says, here's our progress, here's how we're doing. And I don't know what variables you put on it. I really don't, and probably hate myself for saying it because we used to have to do it on campus and I hated doing a dashboard. But I actually think it might be useful if there was maybe 5 or 10 things. We just get one sheet that says, we're doing okay here, we need to watch this. How are our investments going? How are these other things
exactly
going, where we would know above, ahead, behind, so we kind of can take a look at that.
We've been working on that. Go ahead,
I think
Matt.
a piece of that too, Nick, is what we're talking about is as we then are looking to say, if this happens with revenue and we see these things come back, we have an idea of where on both sides we can make the adjustment also. If we see an increase in revenue, then we can say, and whether it's seasonals, whether it's being able to, we will have those ideas too, so that whatever level we start to bump to on a monthly basis, and I believe a monthly basis, Kathy, is what we've kind of talked about,
yes.
would be best, especially initially, that as things move one way or the other, we can adjust one way or the other. Again, remember what we're giving you, and Nick, I think it was your words. I mean, this is really a philosophical look at things at this point in time. On a monthly basis, that's not nearly as philosophical. It starts to be more about operations, and then we have to start making some of those decisions. And I do think that we have an idea that if things continued as we see on paper here, where were things inflated a little bit to make sure that we balance, where were things, because we do have an accurate idea in our mind that says this would be what the fund balance would probably end up being. And before we ever got to that, obviously you would know well on a monthly basis if we were heading in that direction.
Yeah. I've already started with my staff setting some of those parameters. For example, what was our utility billing every month? You know, so we can tell whether people are, how much we're billing out and then how much we're collecting, so that we can start tracking that. And if we start seeing that we're billing the same amount, but we're having a lot more shutoffs or a lot less revenue, we know we've got a problem, and we're going to have to think about that as the year goes on. Same thing with property tax. We know basically where we should be with property tax. If we get halfway through July and there's a big drop off, I'm not waiting till December to say, whoa, you know, we've got through 1 month and the average is whatever and it's way below. We have to then start thinking about that. If this continues, what is that going to mean for us at the end of the year? So we've got a bunch of those benchmarks and ideas, and a dashboard is a great way to do it, so that you can see month to month, historically and current, how things work and what direction they're going, so we can track those trends and let you know this is heading in direction that we're not comfortable with, or this is better than we expected. So until we start doing that, we have no idea. Could be anything, but we are starting to do that because there's so much uncertainty with this, a lot more than usual. So we have to do that to make sure that we're staying on track where we expected it to be.
I think the good idea of that too, I think the one thing that we have learned over these past couple months, and now especially with this past week, is that how much unexpected things can happen. If we have 11 snow events next year, that is going to be a major difference in our budget than if we have two. All of that kind of thing that we need to keep a pulse on and see where we're going and what changes we have to make. If we have 11 snow events in December, January, and February, we've got another 4 or 5 months of this budget to figure out how we're going to get back on track.
Right. Exactly.
And Roger, Dave and I actually talked about that, and if we do have 11 snow events, we're getting Eric a shovel. He does everything else.
I got that. That's good. I got your back on that one.
Yep.
Add it to that list that's in the budget there.
That's it.
You think we could get him a snowblower too, or is that too much at this point? We're going to see how he does with the shovel.
Hey, well, let's see how the budget's doing, if we can do the snowblower or not.
If we can figure out the right end of the shovel, we'll be good.
An interesting part of that, Greg, what you had mentioned earlier too, is we look at, and one of the, I just want to prepare you for this, is to say, we start benchmarking and looking at things, and we want to look at historically where we've been on some things. Some of those things are difficult for what we just mentioned before, because if you're looking at straight numbers on a piece of paper of where they were a year or two ago, we have an understanding that we're trying to get a much better grasp of what that number truly means now. So I feel a lot more confident in Kathy analyzing that and actually analyzing it and saying where we're going. Some of those trends would be hard to determine right away. So we'll definitely work our way through that.
But if there is a variance, and the variance based on what we're looking at really doesn't have to tie back to activity, we can say, this variance is because of this. We will do our best to look back and try to figure out, if the numbers don't work, why is that? So that when you look at it and it's like, well, there's a huge difference, I can tell you, well, this is why the difference is there.
You don't know how grateful I am to hear that, and I will guarantee you your department heads are going to love the same thing.
I agree.
I don't know how the department heads have been expected to manage anything without good information. It's got to be just a horrible job.
Yeah, it's very difficult. So, is there, I don't know.
getting worse. Again, using next term, we're talking about philosophical budget. I'm pretty comfortable, and I guess I'd like to get a comfort level from everybody else. If we look at that, basically 3.8, if you want to look as to what we're looking at expenditures. I mean, it's obviously lower. I think we can manage ourselves. It's probably our best baseline starting point that we can manage ourselves from. I think it's realistic because I know the secondary meetings that have gone on that everybody's looked through. We found certain things, if you look in police looks like it took about a 14% adjustment. But there was an adjustment that and Mark will probably tell you, there was an adjustment made that Mark never even knew was in their budget until recently. And that was that $18,000 a month that was going towards some of the liability payment that we've now been able to take out of there. So, yes, the police department took a bigger hit with the 14%, but in reality, that's a number that by doing something that it didn't really affect his numbers in his operation, which is good because that kept the operation still going in a certain way. And so I got to say that we've also looked, not us, but Kathy in the finance department has looked, and department heads have looked in other areas that we probably hadn't looked before. And now we found some of these things that were like, wow, that's something we could actually work with and be able to do. And it doesn't, the number is a definite effect on our operation. Don't get me wrong. You can't drop over 11% of your budget and not expect it to affect your operation. But part of my kudos is you guys went through and searched things out in a way that we did find some things that we can do by making some adjustments that won't be as painful as we go forward. And that's just me with my rose-colored glasses trying to say, well, 11% sucks, but I think we can still continue to operate. So that and I've said this to the department heads over and over again, any of the effects that the community feels because of those adjustments have to be explained, and we have to be upfront with them as to why, if something's not occurring that we used to do. And that's my role. That's what I think my role is. And I may not understand numbers the greatest, and I've been educated much better looking through this lens this year. But I think my role really has to become that we're not doing things to be cheap. We're not doing things because we don't care about the community. We got to get ourselves through this process right now. We got to get ourselves through this. And if there's questions about why we don't do something or what's the difference, that falls on my shoulders. So if you hear that kind of stuff from the community, please let me know so that we can try to make sure that we're addressing that. And it's not an excuse for us. I don't want us to start using this as our excuse too. So if anything you can do to help us in that manner would be greatly appreciated.
All right, thanks, Matt. If we could, I don't know if anybody's got specific questions. I know I had a few, and most of my notes I made on the non-general fund set of pages that you gave us.
Okay.
And I don't know if anybody else has anything they want to talk to before I start asking some specific questions. So I'll just go ahead then. And then the real property taxes, you talked a little bit about the personal property tax before, the reason we were projecting an increase there. But on real personal property, we had like $1.9 million in 1819, and our projection was $1.9 million in the 1920, but we're going down to $1.6 million, and the department requested $1.4 million. Are we seeing a decline in property value, or what's driving that?
No, the only reason for that decrease is the fact that when you get your tax bill on July 1st, it's gonna be, taxes are based on a formula and they can only go up by 2% per year. So the amount is not going to change, but I think the ability for people to pay that is going to change. I think there will be a lot of people that are going to say, there's no way I can do this, because July is right around the corner. And people are either laid off or they have a lot of extra expenses or daycare or whatever. I do really feel that there's going to be a drop in people paying their taxes. The receivable is going to be the same plus 2%, but but people paying is going to be a lot less.
Okay, and I know we had a little conversation about that early on in this process, and I think some of our thinking, and maybe it was just a conversation I had with Matt, our conversation and some of our thinking at that point was that a lot of that money is escrowed, so it's already in the bank, and this year we'd probably be okay. but it's maybe next year and beyond that the actual payments might be a problem.
Right. And I hope I'm wrong. I'm hoping that it'll be, 1.9.
Okay.
Treasury did release.
9. I don't want it to say, oh yeah, 1.9, no problem. And then it comes in at 1.4, and then you want to hang me in front of the city hall. I'd rather say 1.4, and then it comes in 1.8. I'd rather be it that way than overestimate.
All right. Just to clarify, though, our hanging tree is over in the park. It's not in City Hall.
Okay.
It did come
It's
out
underwater right now.
Yeah.
Can't get there. Treasury did come out maybe 2 weeks, 3 weeks ago, maybe. I can't remember. They had made a slight adjustment too to that, where they initially had believed that we probably won't see much difference in that, and then they backed off that even a little bit of saying, well, and I think it's the same philosophy that Kathy has. It's that same philosophy that said, yeah, I do understand a lot of that's escrow and we're looking at the future, but they backed off a little bit too and said to us, I think you should probably understand you're probably going to take a hit there.
All right. Just wondered what the thinking was behind that. So I think some of these you've answered in other ways. So let me see what else I've got.
MML, guys, has been a huge resource of getting information out, having webinars, having things, and a lot of the projections I know that Kathy's working with and talking about. They've done a lot of things through Treasury. As a novice, when it comes to the finances and looking at these things, I think it's been interesting that they've been very forthright with, well, we know we told you this 2 weeks ago, but we're looking at this a little bit differently now. Chris Hackbarth from there, and Greg, I think you get all of the stuff from MML's finance.
Yeah, Chris is great.
Yeah, they have been, and they're very conservative. That's the good thing. They're very conservative with their numbers too. They're trying to make sure that we're not overstepping and overreaching. That's going to come back to haunt us.
Yes. Okay. I had next questions I had anyway were if you move on to the library, which is 11 of 24 in that one.
11 of 24, Greg, you said?
Yes. On the non-budget, non-general fund report.
Yep,
And
510.
some of it's just kind of weird. There's all these different revenue numbers in there, and one says local unit contribution. Is that our general fund money going into that?
No, that's when people pay their taxes, one of the line items or a portion of that tax is for libraries. So then we distribute that money to the county, but then they distribute it back to the libraries. So that's our portion that comes back from the county.
But the first two line items are real property tax, then there's voted property tax distribution. And then there's personal property tax on top of that.
Right. But the library tax, so that's money that is that's our money. But the local unit contributions is money we send to the county. They redistribute it and send it to the library.
Okay, is that so? The the real property tax is what? That's our general fund money.
That is it's the city's portion of property tax, and this particularly is the library's portion of the property tax. So that doesn't go to the county and then come back to us.
Right. So is that a statutory thing that we've dedicated to the library?
Yes.
I didn't realize we had a statutory library allocation.
I'll have to look exactly what it is because honestly I don't remember, but they do get a certain portion.
Right, and then there's the voted property tax distribution, which I would have assumed that was the money that went to the county and then was redistributed back to us, but
I'll have to check and get with Kathy because I think that local unit, because that's the one we appropriate 175.
okay, and that's general fund money then.
Yeah, so we'll have to check on that and make sure what that number.
Okay, that's what I thought, but
We appropriate
just
the
verify it.
175.
We don't have to have an
This is
answer.
another
tonight,
part
I was
of general
curious.
fund.
And then going down, and it's a minor thing, the next one, but I see 2 line items, DVD videos and CD audio collections, going from $700 in 1819 up to $2,000 and $3,000. I thought those things are obsolete. And we're increasing our purchase of them?
Well,
Again, just a
what
weird
we're
thing.
doing is, let me see if I can find the number. Lori is reallocating some of those things, so we're not buying as much reference books as we are in the past, because most people are not looking at the reference books. So they're doing more of the CDs and audio and that sort of thing than they are reference materials. So if you look at 975 or 974,
Right.
it says reference books.
Right. It went from 87 down to 2,500.
Yeah. So we're taking some of the money that we would spend on reference materials, and we're moving it up to DVDs and CD audio materials.
That's
So
an
what
old.
I'm hearing is there's demand for that stuff still.
Yes.
That's an old term too, though, really, because what
Yeah,
we're talking
kind
about,
of
we're talking about DVD,
general.
CDs. These are a lot of this has to do with I forget what you call them, where it's service related. We are now part of a service where people can go through our library to get it, but you don't get an actual CD, DVD like you used to. It's a link. It's a different thing like that.
More of a streaming service then.
Yeah, more of a streaming. Yeah, and so it's still the category says CD, DVD, but it's really used in that same manner.
Okay.
So we're not actually buying more of the CD, DVDs. It's more of the service area that we're using. Those.
One
That's
example.
what I was concerned with, that we were buying
I
some
have a-
technology that nobody was using anymore, but
Right. No,
and I get that. That's fine.
just an old category that's still in there. We haven't renamed it.
And in several different things, this one happens to be, 50,000 for contract fees. What are they contracting for? 50,000, 52. Well, it's 52 and going to 58 this year. That was line item 801.
Yep. Part of it is IT support,
Okay.
pest control, which I hope we don't need anymore, but it's in there. Library software maintenance, internet services, collection services, ILS, which I think is another software
Yeah.
service.
No, I get it. Yeah, that's fine. I thought it was probably IT stuff, but it just
Yeah.
seems like it should. IT today should have its own category rather than just lumped in with contracting stuff to
Well,
me.
this really is contracted services, because like the support, the maintenance for the software, for camera maintenance, we've got hotspot services in there.
Yeah, I know, and I know we do, and that's part of the reason I asked the question about the DVDs and CDs and stuff. Is I know everything's going to streaming and everything's IT now, and I get that. So I'm fine with that. I just was curious why it's called what it is.
Just let me catch you up on the hotspots. We spoke with the school early last week, and they were not aware that we had a hotspot program. So we told them about it, and I guess there's quite a few kids that are home and don't have internet access or don't have sufficient internet access to do their homework. So the school was very excited to hear that we have about 20 hotspots that we want to make sure that kids, high school kids or school kids, get them. So I've now spoke to 2 different moms today that are really grateful, and they're going to come over and meet with Lori and get a hotspot so that their kids can do their homework.
So we've got these 20, and have they not been utilized in the past?
It wasn't promoted enough because we really got it up and running, and then this whole thing happened, and it didn't really, we didn't really get the message out good enough. But when we talked to the school and told them about it, they were really excited. So now we're starting to get
Yeah,
calls.
we need that stuff now. We need that
And
now.
the
We had
kids
just
that,
taken delivery right before this all hit.
yeah, the school is identifying the parents and the kids that need it the most, and they're directing them to Lori to get a hotspot. So this is going to be fantastic, because the kids that really need help are going to get the help they need. So I'm really happy about that.
Okay. Question on, well, I assume capital outlay and interest is bond payments. Is that what that is? Those two line items you got going there? Is that what's going on? Number 970 and 995?
Yep. The 24/5, that's the digital sign that Lori wants to put up in front of the library.
Okay, I'm gonna scratch that, but we can talk about that later. Do we fund depreciation? Line number 968, we're funding depreciation?
We always have depreciation in there. Yep, because we have to schedule that as basically an expense. Yep, we always do that.
Okay,
And
I would like to propose that we not fund the sign and don't fund depreciation and remove our $175,000 general fund contribution from the library.
Why is that?
If you think back, what we've done historically, that $175,000 was our contribution to the library prior to the tax implementation, and we never reduced our local contribution when we started getting that county money. And I think we're just sitting here building up a fund in this library, and it's this year especially, it's time to put that money back in the general fund. I think there's more uses for it.
I'll look into that, and I will report to you exactly how that works out.
Yeah, we'll have to evaluate that because, you know, a lot of people I mean, I understand we have to look at it, but axing it, you know, I don't know if that's maybe changing the amount, but I don't like the idea of axing all of it.
We can get some.
None of that would affect current service levels.
Well, we can all of us can look at what she has to propose and vote on it.
Well, and that's your decision. So, you know, we'll give you the information, and then you guys can decide.
Thank you.
Is that money just set aside, or is it not real dollars? Is this just a paper?
For the capital projects?
No.
Well, if you look at the next page, you know, it's $128,000 revenues over expenses. So we're actually increasing their fund balance, going from $1.6 million to $1.8 million. And it seems like in this budgetary situation we've got, this is a good time to pull that money back. As we talked about doing years ago when we said the money was coming on initially, and everybody wasn't here at that point, but when the county money got voted in, we were supposed to pull that money back to the general fund, or at least part of it, pull it from the general fund contribution, because, you know, nothing else changed. They just got this windfall of money, and I think we need it other places, right? Honestly.
You want us to look at doing some different percentages?
Yeah, please.
From a full.
And again, I don't expect it to be settled tonight. I just want to start the conversation.
My question was, depreciation isn't part of, it's cost, but it's not part of the operations. Is it? Sometimes people put it on the books, but it's not real dollars, right? So there's stuff.
Well, it's real dollars out of our general fund into the library fund.
So, but is it going into like a sinking fund? Is it going into operations? Where's it? Is it just sitting somewhere?
It goes into their fund balance, yes, I believe. Right,
it really just reduces or increases the expense, because whatever the depreciation is on a piece of equipment or whatever, it makes it worth less. So it's considered an expense, and that everything on here is considered either a revenue or an expense.
Right. Okay. So I guess going back to Greg's point, here we have this on the books, but it doesn't really make a difference.
No, it doesn't.
Okay. So what you're doing is literally making available to spend money that you've taken off the books for depreciation. Right? That 135,000 or 128, we just can't touch because it's part of depreciation.
Yes.
If you just
that's
say
a good way to say it.
skip it, understanding though that when we have to buy new equipment, we need to find the money for that or need a plan for that.
Agreed.
Okay, that's what I wanted to make sure we're clear on.
And I will say, if you remember earlier this year, we did spend money out of that fund balance for the first time in a long time. I think when they were able to replace all of their computer equipment that was old. But I think that's part of too, just being on a better maintenance situation too, that we would be in a better spot.
Yes. 20,000 came out of the endowment, of the library endowment, and the other 7,000 came out of the library fund.
Taking $128,000 out of depreciation is, it's playing with numbers. You're taking it out of the savings account. You're eventually going to have to spend it someplace, but it does not hurt the day-to-day operations right now of the library, nor does $25,000 on capital outlay of $25,000 for a new sign. I think we can certainly put that off at this point.
Yeah, I think putting a new $25,000 sign out in front of the library this year is going to be somebody's really going to wonder why we were doing that at this point when you're asking everybody to cut by 10% and whatnot. And, it just doesn't make sense to me. But again, this is just the beginning of the conversation, right? So, okay, I had, next question I had anyway was on page 14 of 24, which I believe is the library or the airport. And again, we show a $24,000 increase in the fund balance. If the county's going to take this thing over, why are we increasing the fund balance on the thing?
Greg, what was the question? I didn't hear you.
I just wonder if the library or if the county is going to take over the airport, why are we increasing the fund balance?
We don't know that they're going to yet.
That's a good question.
Part of that, Eric, we just found out about a grant, right, for the airport?
Yeah, well, it's through the CARES Act. They'll be giving us up to $30,000 for operations between January 20 to the end of April. We'll be submitting that paperwork back to them next week. So, we should be getting that, a couple, 3 weeks after we submit that paperwork.
I presume that's not in these numbers, though.
No.
Yeah, and I had 35,000 in there, so that's part of the difference. And
so that grant money is in there?
Yes, it is.
Okay.
It's in federal operating grants, which is 581-595-000-502. 35,000.
Okay. Yeah, you've got two of them in there, federal operating and federal capital, right?
I see that.
Yeah. And I assume that's different money, right?
Yep. I'm going to find out because I don't remember putting them both in there, but obviously I did.
Okay. And I believe, Eric, correct me if I'm wrong, but there's two townships that never made their contributions last year, right?
That's correct. That is
okay.
Correct.
I would almost suggest that we don't make our contribution this year from our general fund.
It's a very good point.
They're not paying twice.
That's a very good point.
And it's not going to hurt the day-to-day operations, but it will make the point. I don't know where the county's at, and maybe you could give us an update on where the county's at. But last I heard, they got their study back, but I haven't heard anything since then.
Next meeting would be their next meeting, right, Eric? That they're going to have, that they will be dealing with that. So I think we need to.
June 10th.
June 10th.
Yeah, June 10th. The report came in this week. I haven't got through it all. Really, though, it's nothing more than what we already knew. So it's really going to be coming down to the county on. Yeah. It's really going to come down to the county. Will they take it over as a county run operation?
Yeah. So I guess I would say until they decide, why are we putting more money into it? Because if they are going to take it over, let them have it without our money.
Mhm.
If they're not, we're going to get stuck with it anyway. So,
Good point.
but if they're not going to fully take it over, then I guess we've got other decisions to make at that point.
Yeah, I think there's a lot of decisions that may be on the table here
Yeah.
soon for the airport.
The airport and the fire, and there's a lot of different questions going on that people are trying to work things out. So, I mean, and you tell me, Matt and Eric, Kathy, you tell me politically what the damage is or what the risk is if we do those things too. And I don't want to answer tonight, but if there's political risk in of doing so many things, if there's reasons we shouldn't be doing it, I'd like to hear that too.
Sure. We'll talk about those.
I think it was a big help though, Greg, getting this CARES grant. We're GA Airport, and that's the max we can get. Basically it'll pay for the mowing, our airport manager services that are out there, utilities for that time period, our AWAS system, which is that weather, the weather degrees that you see on the news. So that does take off that burden. So when you're mentioning that, us throwing in our portion of it, that makes it easier for us to say, hey, this came in from the federal government. So this would typically be something that would come out of our contributions. So that would make it easier to stand back and say, now you really need to take a look at, you spent 40, I think it was 42,000 on this
I think it was
study with Mead and Hunt. Yeah. Okay. So, you really need to look at it. It is a county airport. We have probably two residents that use the airport regularly. And from a business standpoint, the college uses it. We have a few business folks that fly in and out, but typically the general aviation folks are from outside the city.
Right.
They don't necessarily live here. So your points to that, hey, we've carried this burden a very long time and got it through some very tough times. And now that the county is seeing some extra revenues coming in from the windmills, and so are other townships. It needs to be the cost of the airport needs to be spread across the whole county instead of just half of it being coming from us. So
yeah, I'm on board with that. I get it. I just throw out my 2 cents worth.
No, it's frustrating, especially when on one hand I get sometimes people telling me, well, it's only $2,000 or $4,000. But then you say, okay, well then kick in the $2,000, $4,000, then it becomes a big deal, and it seems like that's where the politics start coming in. Well, the county should be paying for it. It's like, well, the city of Alma has more than paid for their share, and not just from a financial standpoint, but from the time and effort that we do put into it.
Yeah, I agree. And when Alma had all the industry inside the city limits, Lobdell's total. Everything used to be inside the city limits. The tax base was all here. So much of the tax base in the county proportionally has moved into the township, obviously seeking lower taxes. They didn't want to carry this burden. We can't continue to carry it when they're getting the new building and stuff, the windmills and the nicer homes, the $1 million homes are all outside of the city limits. The factories even, Gar Tool doesn't sit in the city limits, and you just go on and on about stuff that the proportion of the tax base has moved outside the city limits, yet we're continuing to carry some of these burdens that we traditionally did. So it's time to fight back a little bit.
And I would say that the general discussion, I think, started right where you're at, Greg. I think that's where the discussion started. I think over time now we've almost went so long with getting the study and getting the other things that I can tell you, at least for me, and I think Eric, I'm not speaking for Eric, but I think now we're kind of questioning, okay, wait a minute, where is this going? We know where we started this discussion, where are we at? So I'm real interested for the June 10th meeting then to get the county's real flavor on where they wanted to go with this being a county run airport.
Okay.
And at a time, once again, when everybody's looking for ways to tighten the belt, that's got to be one of them.
Yeah, and I can think we can do it at this time without hurting the operations. Same as the library. I don't think it'll hurt operations if we do these things, but it will show us tightening the belt and getting everybody ready that, hey, times are getting tough. And if it doesn't turn around, you might as well get used to it.
And in my department, I'm really stepping up the receivables end. So anything that we need to collect money for, we are creating a receivable so we can track it so it doesn't get forgotten. So
Good.
People are going to get invoices, and if they don't pay them at the end of the month, then they're going to be getting phone calls. So hopefully we can increase the amount of money that's coming in by being a little more forceful in trying to ask for it and get it the money we're owed. So Beth and I are working on that.
Yeah, you did a good job in the past, I think, on collections of the water bills and whatnot. So
yes,
keep up the good work there. I'm sure that's the program type of thing you're talking about. So I like that. And if we have to lose money on something, I'd rather subsidize water than airports or libraries or whatever it may be. Water is pretty essential. Sewer is pretty essential. Libraries are great. I love the library. Don't get me wrong. I love the airport. Don't get me wrong there. But if you're making choices, it's water and sewer above library and airport. You just have to prioritize. Okay. What else did I have? I think that's been answered. What was this? Transit services, page 15 of 24, line 716, license and service certification fees. Going up to $5,000 from virtually less than 1,000.
Remembering on this budget, this is a budget based on a large expansion if it comes through. The requirements in transit are to get those budgets to the state of Michigan out there and in, and so it's been put in through them. And so this is really a philosophical budget based on if those things happen.
Okay.
If you saw the allocation for, you talk about certifications and that, you're talking about a whole bunch of new drivers and different things there in order to make
okay.
that. Cost would be covered.
Where's the increase in revenue? Maybe I missed that someplace.
Let's see. 123.84. I'm sorry, Greg, you said
increases in revenue. There should be extra tax revenue. If the expense is in, didn't we put the revenue in?
Oh, we will. Brett, what is the? I don't think I have it in here, but do you have an idea of what the increase with the budget that you submitted? What it'll be?
As far as which revenue? Farebox?
Tax revenue is the primary driver of this thing, right? Farebox is going to be nominal.
Well, no, not necessarily.
Grants.
We're getting paid mostly by the federal and state government. So
Okay.
76% of my budget this year and next year will be paid by the state and federal government. So we've got to make up that.
But if the expenses were based on, I assume you're talking about, when you're talking about the increase of services, you're talking about Pine River and St. Louis Ithaca passing their millages. Is that correct?
That's correct. Yep.
Okay. So all the expenses were bumped up based on that happening.
Correct.
Where is the increase in revenue from that property tax increase or that
contract?
Well, I guess it's not property tax, it's a transfer in, right? Because
It'll
we're
be
selling the service.
It's listed in the contract fares. If you
Contract
look,
fair.
167 to 325.
Okay, there it is. Then forgive me, I was looking in the taxes for it. So
Yeah.
Yeah,
Okay.
those
That answers
that.
municipalities will be contracting with us. So
yeah. And I was looking for it under taxes. The other question I had with that was line 746. You're buying $10,000 worth of tools and $5,000 worth of parts below it. What's all the tools we're buying?
the new tools will be to service the new vehicles that we have. I have no idea how much those new tools will cost, but it seems like everything we purchase is $500, $500, $500. So I guessed on the side of this is the worst case scenario because that's how, if I don't budget for it, the state won't reimburse me for it. So I guessed high instead of low. So
help me remember, you have a mechanic out there in your garage?
I do.
You have a full-time
Yep.
mechanic?
Correct. Yep.
Okay.
And this budget actually has a second full-time mechanic if we get this expansion.
Okay. Asked and answered then. That's good. That's good. Those are good. Oh, that's good. Yeah, I think those are that's the most of my questions right there. So I'm sorry to hog the conversation, but if other people have questions,
Educational.
And feel free to reach out because I don't mind spending as much time as you'd like going over whatever you'd like because I've got spreadsheets and schedules and notes. So whatever you need, don't hesitate to let me know and I'd be glad to go over it with you.
okay, I appreciate that, Kathy. Thank you.
The reason this has become this big again, too, to be frank, is everything we just talked about is laid out in here in a manner. I think that some of the questions you have, even it's pretty easy to see. It's not as daunting as that looks because every page is short, so that it only deals with funds, so you can actually see them all laid right out there. So
I've got a spreadsheet for everything.
the queen of spreadsheets.
A girl after my own heart.
I just want to, before we go any further, I want to make sure to say that this has been interesting to go through this, and I do appreciate you guys coming back after the last one saying, look, we need to see numbers and talk about numbers, and so that kind of locked us into looking at things and put us on this time frame. Even though we knew, as much as this is philosophical, now there's some base to it, and there's some real look that I think will give us the opportunity. And again, I just continue to stress that we are going to be looking at being able to slide either way, depending on what we see revenue wise, depending on what we see happening, and already prioritizing some of those things that could come back. It's ironic when Michelle, you brought up the seasonals. I happened to be walking in after checking the bridge yesterday, and one of the DPW guys that was out mowing here, I stopped and was talking to him, and I get it. And I feel bad, David, because you and I have talked a lot about it and we have these things, but when you talk to somebody then that works in there and they can really give you that reason why, and it's not the department head saying, geez, we need those people. When you got the guy that's actually sitting on the mower going, yeah, now I got to run from here to do this and to here. And so you get a better idea really of how these things do impact everybody that works here. And in turn, then if it impacts us, it's going to impact the community. We're going to do everything we can to continue to make sure that we're providing the best service that we can, but you can't make these kind of cuts without there being something noticed. And so we're going to do everything we can to minimize that for the community and to make sure that, we're answering their questions when they have them and responding as quick as we can.
Very good. Well, my compliments. I think you guys did a fine job putting this together, and I have a lot of confidence that you are prepared, just as you said, to watch the canaries and watch the leading indicators and be ready to adjust as they would inform us. So I'm very grateful. I think you guys did a great job. Thank you very much.
We're a good team. Everybody worked really hard on this.
And thank you. And thanks for the questions you brought up, Greg. I appreciate your insight. And I know that the library has been wanting that electronic sign, digital sign for years and years and years, and we've been discussing it. But I agree with your perspective that at this point, the sign probably isn't where we need to put that money. So again, I appreciate everybody's input and insight, and thanks, Kathy and team, for the information. I appreciate it.
I'm on the same page. I don't pretend to understand all of this, but it gives you, even the time that I have spent in looking at it and talking about it tonight, it makes sense. And I'm willing to approve this budget, thinking that we have a pretty good handle on it. I think we do need to have that dashboard thing because
yes,
if a Midland happens here, we've got to know what we're going to do to adjust it. And we can't say, well, that's not going to happen to us. But 11 snow events could, and another flood could. Who knows? We've got to be ready for that.
And I can't say enough about Kathy and setting up the ledger properly and having that ability to drill into things and get accurate answers and have accurate information is going to make having the dashboard or preparing the dashboard and having it accurate.
Yeah.
We've had attempts at dashboards in the past and they aren't worth the paper. They were not worth the paper they were printed on, just like most of the financial reports we've seen for years. So I am so excited about going forward with some good, solid information and being able to have some real numbers to look at. So thank you.
You're welcome.
Anybody else have anything? Final comments from you, Kathy?
Just, please reach out if you are looking through this and there's something that you don't understand or you want to comment on or you need more information. Please just email me or call me. If I don't know the answer right off the top of my head, I will research it and figure it out and get right back to you. So I want to make sure that you are very comfortable with what I'm giving you. So please, if you need more information, please come talk to me or call me or whatever.
All right.
Thank you.
Great.
All right.
Anybody else? Okay, we'll call it a night then.
Thanks, everybody.
It's going to